2 weeks ago, I sat in a session with an experienced insurance advisor who has been in the industry for about 30 years now. Shared one of the most striking events that has happened to him since he started his journey as an insurance advisor. It was basically a client he wrote a policy for, and within it took about 2 weeks for the policy to be ready, but within that time, the client died in a motorcycle accident. But guess what? The client still got paid the claim on that policy. And the reason was because he had insisted that the client get a temporary insurance agreement, which is basically something that insurance companies offer to people who are applying for insurance, that once you pay the first premium immediately, even though the main insurance contract is under process and is not yet approved, you have a temporary insurance agreement in place that covers you in case anything happens between the time of approval, because approval can take anywhere between a few days to a few weeks depending on what is involved. And it's something that really touched the nerve for me, because I sometimes tell clients, you don't need to pay now, right? You just pay when the policy is approved. But I think I've been doing my clients a disservice, because the truth is, if you apply for an insurance policy today, you don't get a temporary insurance agreement in place. It takes a month for your policy to be approved. If anything happens to you within that month, you have no coverage. But if you paid immediately and get that temporary insurance agreement in place, then if something were to happen to you within that time, your family would be able to get compensated based on that temporary insurance agreement. I'm wondering, did you know this about insurance? Have you ever heard about temporary insurance agreement? I would love to hear what you think. Just leave it in the comments below.